Hey traders, welcome to this week's episode of Traders Trade, episode 9 for the week of October 19 to the 23rd. This is your host Dan. I'm sorry I have not been posting for the past few weeks. I was busy traveling on the road and I also had a busy schedule, but I'm glad to be back. I'm glad to be back with you and I hope the market was treating you well. All right, let's get right back into it. So let's recap last week. The market made a lower high from the September high. So we made a lower high and was not able to make a higher high. We are still in an uptrend. There is some fear from the spike in COVID cases, but I think by now we should know the drill. When you see a spike in the cases, it's going to peak and then it's going to head back down. So I don't think this is anything to be concerned about, especially knowing that we're heading to the winter season. For economic reports, the CPI and PPI did better than expected, and the Philly Fed had also amazing numbers. Retail sales was also better than expected. So economically, we are doing well. All right, for the market, as you can see, we made a lower high. We were not able to go past the September high. We are still in an uptrend. We are in this up channel, but be careful. We are possibly in a symmetrical wedge or triangle. So we might be heading down and then just bouncing up and down in this range. For the Dow Jones Industrial, we are also in an up channel. We also did not beat the September high, and we're right now in the middle of the up channel. The Dow Jones Industrial still has not made a new high from the pre-COVID high. So it's slowly getting there, and we might get there possibly in November or in December. On the other hand, the Dow Jones Transportation is looking very bullish, and the DJT, in my opinion, is better reflection of the economy. Again, when people make products, it needs to get to the customers. So you need the logistics and transportations, like all the trucks, all the cargo planes. So to see this continuing to march up is a bullish sign for the economy. As you can see, we made a new high from pre-COVID and continuing to go higher. And we are approaching the apex of this wedge. So as we get closer and closer to it, the index is going to have to decide what it wants to do. The Nasdaq did not make a new high from September. This support from before September is now acting as a resistance. We did not make it and has fell below it. This uptrend is now being tested, and we'll see if it's going to hold or the market's going to go sideways or lower. For the Russell 2000, it was able to make a new high from the September high, did fall below, and this resistance before is acting as a new support, and we were able to close above it. So that's a bullish sign. I did notice a resistance from this channel. Just be careful there. So overall, for the market, we are at least neutral to bullish. Onto the sectors. First is material. This support from before is acting as resistance now. As you can see, we touched it and bounced from it and closed below it. Uptrend is still intact, and we still have this support right here. So right now we're just bouncing in between the new resistance and new support. Energy continues to trade below this trend line, and we are getting closer and closer to the apex of this wedge. Did we make a bottom from October? We have to see. Right now, we are right at the top of the wedge. This could be a bear rally, and we could be hitting down more. For me, I might try to do a bear rally trade. I would short it here and then just put a really tight stop. For financials, it is moving sideways, pretty much trading in range. As you can see, we have this symmetrical wedge, or you can say a channel, and the moving averages are moving sideways. So I would probably trade, probably short some calls and short some puts around it. And if it just stays in this range, then we can make money that way. Industrials looks like the Dow Jones Transportation, minus the fact that it didn't make a new high from pre-COVID yet, but it was able to make a new high from the September high, touched the new support and bounced above it. So that looks bullish. There is a up channel right now and it's right in the middle of it. So yeah, it looks good. Technology did not make a new high. This support before is acting as a resistance, and we didn't even make it to it. Bounce below. We are still in an uptrend and it is being tested. So we're gonna see if it can continue to go higher or go below. My bet or probability would be for it to move sideways or lower, just because when you look at how far the price is from the 200-day moving average, that is still far away. And most things will revert to the moving averages. And actually, look back at the weekly, the width from the price to the 200-day moving average actually still wide. So that's why I'm thinking this is going to move sideways or lower until the moving average can catch up. Consumer staples did not make a new high. It is at the top of this symmetrical wedge now. The uptrend is still intact, so we'll see. Consumer discretionary did make a new high this past week, but was not able to close above the September high. And the uptrend is definitely being tested in this tight wedge. For this sector, I wouldn't do anything. I would wait to see how it's going to play out. And again, also notice how far it is away from the 200-day moving average. Notice how back here, the width, and then notice it didn't really, it's pretty much almost the same, maybe a little bit shorter, but for us to move higher, we need to see the moving average catch up. Real estate is another sector that's moving sideways. There is an up channel, but it's pretty tight. This resistance at 37 is pretty strong. The moving averages are sideways, so this is a sector that I would put a sideways trade on. Utilities is looking good. So it was consolidating for about since June. So that's about 4 months. Broke out of the consolidation in a pretty strong move. Also break above the June high. Fell down to test a new support and close above it. So that's very bullish. Right now, the target would be the high back here in March. Healthcare did touch the September high, but was not able to close above it. It might be waiting for some vaccine news. Communications did not come close to the September high. There is this resistance here that is holding it down. Uptrend still intact at the moment. So I would be overweight in utilities, materials, industrials, and staples. And then I would underweight the real estate and energy sector. And the rest are market perform. Okay, on to educational content. If you have not heard of Seykota yet, he is a legendary trader. He was documented in the Market Wizard series, and he posts his strong and weak stocks on his website. I'll link it in the description. You can study from his list what a strong stock looks like and what a weak stock looks like. I follow the strong stocks to trade on a pullback. I will go long when they pull back. And for the weak stocks, they are down to the pennies. So this is not something that I feel confident yet. And it just shows you his level of experience and confidence and conviction that he's able to short stocks even down to the pennies. Events this week. So for earnings, a very, very busy week. I'm not going to go over all of them, but definitely going to be watching and monitoring this week's activity, especially Tesla on Wednesday. So for this week, it looks like the market is moving sideways or consolidating. So expect volatility. And that's just because there are so many unknowns up ahead. The election results are coming up, and the losing party might not be okay with the results and contest it if it is really close. There's a possible twindemic coming from the flu and COVID, and the stimulus is still in limbo. For economic events, we have the Beige Book on Wednesday, jobless claims and existing home sales on Thursday. All right, so in conclusion, the market doesn't want to go up, but it also doesn't want to go down, right? So it's consolidating. It looks like it wants to go up, but there's just not enough conviction to just push it through. And that's just because of all the unknowns that are coming up, especially from the election. If we get a close election and it gets contested, that's really gonna spook the market. The market doesn't like unknowns. So just as a trader, just be agile with your trades for now, right? Be able to go in and out. If your target hits, I would take the profit because you don't know how quickly it can turn against you. And if you're doing options, I would be cautious about using any expiration beyond the election date. Again, just because we don't know what's going to happen. All right, traders, happy trading. Hoping you guys have a good week. I'll see you guys next week. All right, take care.